Welcome to the Deep Dive, the show where we take your source material, dig deep, and pull out the insights that really matter. We're here to give you that shortcut to being genuinely well-informed. And today, we're jumping into the world of mineral resources. Specifically, we're looking at a company called Integra Resources. You asked us to really get into one key question. Is Integra Resources undervalued right now? So we'll be looking at their projects, their financial game plan, valuation stuff, and the team making it happen. It's a pretty interesting case study, actually, on how a mining company tries to grow and how we can figure out what it's really worth.
Exactly. We've gathered their latest corporate presentation, financial reports, and, some broader info on valuing mining companies. Our job is to boil all that down for you, help you understand where Integra stands today, what their future might hold, including the nitty-gritty on their assets and financial performance.
Okay, let's unpack this then. Integra Resources trades as ITR on the TSXV and ITRG on the NYSE American. They've got some projects that look quite interesting. What are the key assets they're really focusing on? And crucially, how are they planning to pay for all this growth they're aiming for?
Well, what's really interesting here, I think, is their strategy, especially with the Florida Canyon mine. It's not just, another asset. The cash flow coming out of Florida Canyon is specifically earmarked to fund operations until their other main project, Delamar, actually starts producing.
Ah, okay.
This is a really core part of their capital allocation plan. Very disciplined. They're aiming for near-term profit to basically self-fund the next stage.
So Florida Canyon is the cash engine. Makes sense.
Yeah.
What about these other projects then? You mentioned Delamar. Tell us about that one. Why is it so important?
Right, Delamar. It's in Owyhee County, Idaho, and it's really their flagship project, sort of on the cusp of moving from being a developer to a producer. The sources we looked at highlight some significant growth potential in what they call non-oxide gold equivalent, or AUE.
IEQ, right. Gold equivalent.
Yeah, basically combining gold and silver value. And this potential is below the stuff they can already easily process with heap leaching. So deeper exploration potential.
Okay, deeper potential. And are we talking significant amounts here? Any, standout drill results?
Oh, yeah. Some results from a place called Sullivan Gulch really jump out. We're talking intercepts like 0.76 grams per ton gold and almost 70 grams per ton silver. That works out to 1.66 grams per ton gold equivalent over nearly 400 meters.
Wow, 400 meters. That's a huge intercept.
It's substantial. Consistently over a gram per ton is generally good for this type of deposit, so 1.66 over that width.
Yeah.
It really points to the scale of what might be there at Delamar.
That's some serious gold and silver. Okay, beyond Delamar, what else is in the pipeline? Any other exploration targets that look promising?
Definitely. They've got the Nevada North project, including the Wildcat deposit. They did some drilling there late last year. But maybe even more exciting, potentially, is the Red Canyon project. The sources describe Red Canyon as having all the key hallmarks of a world-class Carlin deposit.
Carlin deposit. Okay, that sounds important. World class.
Yeah.
What are those attributes? What makes a deposit Carlin type and potentially world class?
It's like a geological checklist for finding monster gold deposits, really common in Nevada. Things like having the right kind of host rocks reactive carbonates and extensive deep oxidation, meaning the gold is potentially easier to recover.
Easy to recover, okay.
And the geology looks a lot like Barrick's Cortez Hills mine, which is, a giant.
Known giant. That's a good comparison to make.
Exactly. The list also includes things like deep crustal breaks, think of them as pathways for fluids, and pre-mineral deformation, which creates space for the gold, altered rocks decalcification, evidence of the right kind of magmatic or metamorphic fluids.
So the whole geological recipe seems to be there.
It seems like it. Plus, you see things like jasperoidal replacement, which is a type of silica alteration often linked to gold, and geochemical signatures on the surface, mercury, arsenic, thallium, classic pathfinders.
Pathfinders, right.
These anomalies suggest a really large hydrothermal system was active there, and the drilling backs it up. They've hit intercepts like 2.6 grams per ton over 22 meters, including a richer zone, and even better ones like 4.5 grams per ton over 54 meters, and that included a really high-grade bit of 9.2 grams per ton over 22 meters. So strong mineralization.
Okay, so promising geology, promising drill results, but here's where it gets tricky, maybe. Yeah. You mentioned the stock price. It's taken a beating, apparently down over 80% in 4 years. That sounds like a depressed valuation, all right? Yet the company says it's an attractive entry point. So how do we square that? What do the recent financials actually say? And how do we even start thinking about whether it's truly undervalued?
That really is the million-dollar question, isn't it? Or maybe the multi-million-ounce question here. You can't just look at the stock chart. The Q1 2025 financials give us some clues. Revenue is just over $57 million for the quarter.
Okay, $57 million.
Gross profit was about $15.5 million, and the big one, net income of nearly $1 million, $983,000 to be precise.
A net income, right? You mentioned they had a loss before, so that's a significant turnaround.
It absolutely is. It signals a shift towards profitability, which is critical for any company, especially in this phase.
Okay, a positive shift. But what about their costs? Are they making money because gold prices are high, or are their operations efficient? And what's their cash situation like?
Good question. So in Q1, they sold about 19,500 ounces of gold. Their total cash cost was $2,016 per ounce. And their mine site all-in sustaining cost, or AISC, that's the really key one industry watchers focus on, was $2,342 per ounce. The total AISC, including corporate overheads, was $2,446.
$2,446 AISC. So with gold well above that, they're making money per ounce.
They are, and crucially, their cash balance actually went up. It increased from about $52 million at the end of 2024 to over $61 million by the end of March 2025. And management specifically pointed out this increase came mainly from operating income.
Ah, so not from financing or anything, but from the mine itself.
Exactly.
Yeah.
Which supports that whole strategy of Florida Canyon funding the other stuff. It shows the cash engine is, well, actually generating cash.
Okay, that's clear. They're generating cash.
Mhm.
But how do we connect this back to that idea of being undervalued?
Yeah.
You mentioned valuation metrics before. What about things like net asset value, NAV? How does that work for mining companies?
Right, NAV. It's a fundamental concept. Essentially, you estimate the future profits from all of a company's projects, the net present value, or NPV, of each one taking into account mining costs, metal prices, taxes, and the time value of money. You add those all up, adjust for debt and cash, and you get the net asset value. Then you compare that NAV to the company's market capitalization, its total stock market value.
So you're comparing the theoretical value of all their assets to what the market is currently pricing the company at.
Precisely. Is the market paying a premium or a discount? The source material suggests that for a company like Integra, moving from developer to producer, well, there's significant near-term re-rating potential.
Re-rating potential, meaning the market might start valuing it higher as it hits those milestones.
Exactly. As they de-risk the projects and start generating more cash flow from somewhere like Delamar, analysts often apply higher valuation multiples, more like established producers. The sources mention comparing them to peer junior producers using metrics like the price-to-NAV ratio, or PNAV. If Integra is trading at a low PNAV compared to its peers, and they execute.
Then there's room for the stock to move up just to catch up with those peers, even without higher gold prices.
That's the idea. Significant potential upside if they deliver.
Okay, NAV makes sense. But listeners often ask about something maybe more tangible sounding, the cost per share of the gold in the ground. How does that concept fit in, or does it?
Yeah, that's a common question. The source doesn't give us that specific calculation for Integra, like dollars per share per ounce, but it does talk about related ideas, like market cap per ounce of resource or reserve. What's really important here, though, is the concept of leverage to the commodity price, which the source explains quite well.
Leverage, okay.
Think about it. Say it costs $1,500 an ounce to mine gold, and gold is at $2,000. Your margin is $500.
Right.
Now, if gold goes up 10% to $2,200, your cost is still roughly $1,500. Your margin jumps to $700. That's a 40% increase in margin from just a 10% rise in the gold price.
Ah, I see. So the company's profitability and potentially its value increases much faster than the gold price itself.
Exactly. That's the leverage. Mining stocks offer magnified exposure to metal prices. And Integra has a large base to apply this leverage to the measured, and indicated resources are over 5 million ounces of gold, plus over 2.5 million ounces of silver. That resource base is the foundation for that future potential value.
Got it. Okay, so a good strategy, projects look promising, financials seem to be turning a corner, and there's that leverage factor. But it all comes down to execution, right?
Yeah.
Does the management team look like they can actually pull this off?
Absolutely critical point. A great plan is useless without the right people. And Integra seems to recognize this. They've been specifically strengthening their team. They brought in a new VP Finance, Sean Deisner, in March 25, and a VP of Permitting, Dale Kerner, in February 25. Permitting is hugely important so that hires, they're serious about moving projects forward quickly.
Okay, key hires. Who are some of the other leaders? Anyone with, like, serious track records?
Yeah, the team looks pretty deep. Scott Olson, VP Engineering, has over 25 years worked in senior roles at places like Barrick and Kinross. Raphael Dutat, VP Geology and Mining, over 15 years, senior technical roles at IMGLDD, and he's a QP, a qualified person under those NI 43-101 standards.
CP, right. Important for credibility.
Very. And Mark Stockton, VP External Affairs and Sustainability, was involved with Integra Gold before the company that got bought by Eldorado Gold for $590 million back in 2017. That's a significant successful exit.
Okay, that definitely counts as relevant experience. What about the board level? Who's providing oversight?
The board also looks strong. George Somas, the president and CEO, used to run the Canadian Malartic mine, a huge operation. Janet Yang, a director, is a CFO, previously on the board of Argonaut Gold. Ian Atkinson, another director, has like 50 years in the industry, former CEO of Centerra, involved in major discoveries. Timo Jaristo, over 35 years, former exec at Gold Corp and Placer Dome, involved in big deals. Ruben Padilla, an advisor, decades in senior exploration roles.
Wow. Okay, that's a lot of decades of collective experience across the board. Exploration, development, operations, finance, M&A.
Exactly. That breadth and depth is pretty vital for navigating all the challenges of building and running mines.
And beyond just the resumes, do we get a sense of their overall philosophy? Like how they approach the business, especially things like environmental impact and community relations, ESG stuff?
Yes. The sources make a point of highlighting Integra's commitment to ESG, environmental, social, and governance. They state it's embedded in their decision-making. They talk about creating benefits for local communities, donations, volunteer hours, engagement, promoting a culture of safety, protecting the environment, and having rigorous governance, board oversight, management accountability to manage risks and grab opportunities. It's all part of what the source calls their proven management track record.
Okay, so we've covered a lot of ground here. The projects, Florida Canyon funding Delamar, the potential at Red Canyon, the financials turning positive, the valuation discussion, NAV, leverage, and a seasoned management team. Bringing it all together, what's the final thought for our listener mulling over that original question? Is Integra Resources potentially undervalued?
Well, the source material certainly leans that way. It explicitly says the transition from developer to producer provides an extremely attractive entry point for investors and highlights that significant near-term re-rating potential. So I think the key takeaway for you, the listener, is that valuing a mining company like this isn't just about today's numbers. It's about the long-term potential locked in those resources, and importantly, whether you believe the team can actually unlock it. And remember that standard valuation methods like DCF might not fully capture what they call the real options. Value the flexibility inherent in having those undeveloped reserves ready to go when the time is right.
Fascinating point about real options. It really highlights the layers involved. Now, speaking of complexities and potential risks, we absolutely need to include the standard disclaimer here, right?
Absolutely. Essential. Look, the information we've discussed is based purely on Integra's corporate presentation and financial reports that we reviewed. And critically, it contains forward-looking statements. These are projections and plans, not guarantees, and they come with inherent risks and uncertainties.
Right. Things can go wrong in mining. You could have technical problems with exploration, issues during operations, accidents, labor disputes, delays getting permits or funding, and risks dealing with local communities, environmental factors. Mineral exploration itself is speculative. Getting licenses, permits, it's never guaranteed.
Exactly. So anyone interested is strongly advised to read the detailed risk factors. They're disclosed in Integra's annual information form, the AIF, for the year ended December 31st, 2024. It was filed March 26th, 2025. You can find it publicly on Cedar Plus in Canada, that's www.cedarplus.ca, and on ADGR in the US, www.ct.gov. Look up the company's profile.
Okay, Cedar Plus and ADGR.
Yeah. And it's really crucial not to put undue reliance on these forward-looking statements. Actual results could be very different. The company also states they don't intend to update these statements unless required by securities laws.
Understood. Important context for everyone. Well, thank you for joining us on this deep dive into Integra Resources. We hope this breakdown has given you a much clearer, more informed perspective.